Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to this week's Top Stock Picks of the Week. I'm Tracy Reinick, and I'm joined by Brian Hayes, bringing you two Zacks #1 ranked strong buy stocks that you should keep on your radar and be watching, especially during this earnings season. And I'm going to lead it off with one of the retailers. Yes, there are some retailers that are Zacks #1 ranks. How could that be? Let's dive right in and see what my retail stock is. So my stock is Ulta Beauty, ticker ULTA. And you might think all retail is kind of the same, all kind of lumped together. So it rises and falls together. But there are like little niches within the retail industry that you have to be aware of because they aren't all the same. And one of those is the beauty side. And Ulta Beauty is one of the leaders on that side. Now, beauty really got hammered during the pandemic because we weren't going out. We weren't going to work. We didn't feel like we needed to, update our skincare or even our hair care in some cases while we were in lockdowns or just stuck at home. But that's all changed on the reopening. And now makeup is seeing a surge again, and that is helping Ulta Beauty. So here are the earnings estimates that you can see. The analysts are bullish. That's what's giving it the Zacks #1 rank. You can see for this year, 14 have raised in the last 60 days and 13 for even for next year, they're bullish. And we're seeing some nice earnings growth here off of what happened last year, and also some nice sales growth here. Expected to see double digits this year, and then weakening a little bit next year, but it's too early to know because we have to see how everything plays out with the weakening of the economy. But beauty is something that you can add to your lifestyle for relatively cheap costs. You can always go down from prestige beauty, which are like the Lancomes and Estee Lauders of the world, down into the drugstore types in, the stuff that you can get a lot cheaper if you're feeling stressed about your job situation, inflation, all of these other things. So beauty actually covers a wide area. In addition, Ulta also has in-home salons and also their brow bars and some skincare. So all of that is bringing people into the stores. And I don't know about you, but I tend to buy more when I actually go into the stores and start looking around at things. There's just a bigger sales opportunity there. So Ulta is winning on both online and in the stores. And how does this earnings look on the charts? Oh, I wanted to talk about the earnings surprise. So the reason the earnings are on the increase is because in the last quarter, as you can see, they put together this very good earnings surprise streak during the pandemic. But last quarter, you see this big surprise here, surprised by 41%. Because everybody assumed, oh, it's retail, the consumer is slowing, this won't be good. But it was much better than expected because people still are buying skincare, hair care, and then the makeup category, both men and women across all their lines. So they upped guidance for the year. And that's where we see that big beat and their bullishness on the rest of the year. That also took the street by surprise because what retailer is upping guidance right now in the face of possibly an economic slowdown? But Ulta is. And it also, as you can see, has this nice earnings streak. Now, what do those earnings look like? It's looking pretty good. This is quite a positive chart for a retailer here. You can see the 2020 falling off a cliff there, not surprising, but slowly rebuilding back into some nice earnings momentum and year-over-year gains, as you can see here in 2022 and in 2023. The stock is kind of just meandering around here in 2022, but given that the S&P 500 is down about 20%, off of its beginning of the year here, and this does not look quite as bad as what that is. We actually have some little bit of momentum off of that earnings beat, and then it did pull back. Year to date, it's down just 1.4%. Now, what about valuations on this? Because it hasn't seen the big pullback, but earnings are on the rise. So it has the good positive combination we like to see. Well, earnings, because they're not increasing quite as much as what the stock is doing, it's still a little bit pricey here with a forward P of about 20. So that is reflecting a premium in this stock. Can it hold up? And what will they say this next earnings quarter? Will the consumer decide, hey, I don't need that skincare after all? I have to fill up my car with gas instead. We don't know. But if I were to bet on any of the retailers right now for navigating a recession, I would bet on the beauty companies, and Ulta Beauty is one of the big ones. I own it in my own personal portfolio, and I have for 5 or 6 years now. So this is one to watch on the retail side. They don't report earnings again until way late in the earnings season. So we do have numerous weeks to see what's going to happen, but they are a rare Zacks #1 strong buy on the retail side. And that's something to watch this earnings season. So I'm throwing it over to Brian now for his top stock pick. And I can tell you it is not a retailer. So I'm heading it over to him.
Thank you, Tracy. My top stock pick this week is Franklin Covey, ticker symbol FC. Franklin Covey provides training and consulting services for organizations in areas such as sales performance, customer loyalty, employee productivity, and educational improvement. So they're a consulting firm that helps companies achieve their desired goals. FC was incorporated in 1983 and is based out of Salt Lake City, Utah. That's a bit about the company's background and services. Let's shift gears a bit and look at FC's industry group. Taking somewhat of a top-down approach here, let's examine some characteristics of Franklin Covey's industry. Stocks tend to move in groups, and if we can identify which groups are outperforming the market, it can really make our job easier in terms of selecting individual stocks. I'm constantly examining the top industries, and when you do that, you start to notice individual stocks in certain industry groups that make new highs almost daily. These are the industry groups I like to focus on to narrow down my list of the stocks with the greatest profit potential. Quantitative research suggests that approximately half of a stock's price appreciation is due to its industry grouping. So focusing on the top performing industry groups can provide a constant tailwind to our investing results. It allows us to not only narrow down our list of stocks to buy, but also provides us with a list of stocks with the best profit potential. As we can see, FC is part of the Zacks consulting services industry, which currently ranks in the top 18% out of 252 industry groups. So what does that mean? It means that stocks in this group are experiencing positive earnings estimate revisions, which is the most powerful force impacting stock prices. And digging a bit deeper here, let's take a look at the stock charts of some of these Zacks rank 1, 2, and 3 stocks included in this group. And what do we find? These stocks have not only held up extraordinarily well throughout this year amid the bear market and associated volatility, but many of these stocks have staged new uptrends and are breaking out to new highs, which is a big sign of strength. This serves as another confirmation that stocks in this group are a great place to be in this market as they are performing well. So we can see the power behind locating leading industry groups and the tailwind that it provides. Another big plus for this industry is in the key metrics section down below. And we can see that both projected and historical earnings growth are well above average. Moving to our snapshot screen here, we can see that Franklin Covey is ranked favorably by our style score categories with an A for growth and a B for momentum, paving the way for an overall B VGM score. Also note that FC is a Zacks rank #1 strong buy. And take a look at this history of exceeding earnings estimates. The company has missed estimates just once in the past 10 quarters. Franklin Covey most recently reported fiscal Q3 earnings back in June of 26 cents per share, which translated to a 44.44% positive surprise versus the 18-cent consensus estimate. Franklin Covey has also posted a trailing four-quarter average earnings surprise of nearly 237%. So they've been consistently beating earnings estimates by a wide margin, and the stock price is really reflecting this. Analysts that are covering the company are in agreement in terms of revisions and have been raising estimates across the board. For the upcoming earnings announcement, analysts have raised their fiscal Q4 estimates by 8% in the past 60 days. The Zacks consensus estimate now stands at 27 cents per share, reflecting potential growth of over 107% relative to the same quarter in the prior year. It's obvious the growth is there and looks set to continue. So Franklin Covey, ticker symbol FC, is my top stock pick of the week. Make sure you subscribe to get all of our top stock picks. We bring them to you here each and every week on Zacks.com. From Tracy and I and everyone here at Zacks, thank you for watching. Tune in next week for more of our top stock picks.